My name is Bill Haley for the Facebook page called Competitive Currency. I want to create a new monetary policy or monetary system for the United States of America. And we could try it out in each state if you wish. But this is the basic bullet points of the competitive currency and how it works. So we'll go over the quick bullet points, and then I'm going to go back and do separate videos on each bullet point and expand on that a little bit. So I'll try to hold this down to like 15 minutes, and then I'll give some more bullet points and more videos. So let's just go over the whole thing. This is going to be called Competitive Currencies, and it'll be on the Facebook page, Competitive Currency. I put this out on other social media, YouTube, and the like as well. So it's going to be fully backed up. All the currency is going to be fully backed up. That's a key ingredient of competitive currency. Is one standard unit. Even though we will have multiple currencies, really about 1,000. We can call it between 600 to 1,000, about 12 per state. And I want to get to a point where we have about 100 states in America. And that's another video, but so about 12 per state, 10 to 12 per state. So easy 1,000 currencies. And then we have one standardized unit. Let's keep on going. Easy exchange. So all the currencies will be digital, except for the one standard unit, which will be the paper and the coin. But all of them will be all of them will be digital, and I will explain that. And that does not say that you cannot have paper and coin for the other currencies, but it's just going to be a lot more difficult, and we'll see why. The requirements to become a recognized currency. So you have 10 per state, 10 to 12 per state. So what's the requirements to become a currency? So if a bank or a new organization wants to create a currency, what do they have to do to be a recognized currency? What's all the regulations around that? And let's just go with the big bullet points. A currency must have assets to 100% back up its currency. So that is the main thing there. A currency must have at least 5% of its state's total assets used to back up currency. So that's where you see that we get about 10 to 12 currencies. So if each state can have a currency, but you have to have at least 5% of your states and no more than 20% of your state's total assets to make your currency. So if you grow bigger than 20%, split and create two currencies. So you're 10, 12% each or so. But that's a requirement. We don't want one to become monopolized in that state. And we want to keep it small enough that we have that competition, and also one does not become monopolized. And for a lot of reasons for that. We won't go over it right here. On the other videos I might. The currency must value assets within acceptable standards. So we'll go over what assets can be, but they must do it within acceptable standards. So the requirement to become a currency, you have to have acceptable standards on the assets value, such as a percentage of assets in respectable trading markets. So gold, stock market, bonds, all these have prices, known prices in the marketplace on acceptable New York Stock Exchange and the like. Not just that one, but many are going to be acceptable markets to be that. And a percentage. Now you can have other things in there that's not traded on the market, and we'll go through that too. But a percentage will have to be that, so people can feel sure that your currency is going to be legitimate. A currency must accept every other recognized currency, and we'll go over that and how fast you can turn it right back into your currency, and what somebody getting your currency means. So you get somebody else's currency, they get your currency, because in the marketplace people are going to be trading currencies. All 1,000 of them will have an easy way of doing that. Don't get me wrong. One standardized unit and one clearinghouse, and we'll talk about that. Let's see. Let me see if I skipped something. Okay, one recognized currency. Wait a minute. A currency must accept every other recognized currency. We just did that. Every retailer must accept every currency, and the BD, the back dollar, that is the average of all of them. But that's going to be the coin. That's what everything's going to be based off of. Price is going to be priced in the BD, the back dollar is going to be legal tender. So all the currencies and the BD are going to be legal tender. Everybody has to accept it because you automatically, within hours, you get back your currency. You bring it up to the central clearinghouse. Operation of a currency. A currency creates a monetary currency asset portfolio. I made that name up. It's monetary because we're dealing with money. Then I put a dash in there because it just made it look better. Currency asset portfolio, MCAP, because capital markets and the like. Capital markets is based off of things of worth, and this is going to be things of worth. So money based off things of worth, MCAP. An MCAP is a storeroom of actual items of worth, such as gold, stocks, bonds, real estate, commodities, loans, and other items of real value. Some of these things are on the stock market or other trading markets like gold is and the like. So that's going to be easy to transfer back and forth between MCAPs. MCAPs are going to be the storerooms of items of worth. So let's keep on going. The currency has an ownership right of the MCAP. So whoever owns the currency owns ownership in that MCAP, owns a percentage of that MCAP, specifically a percentage of the MCAP, based off of if you own $100 of that, and there's let's say $10,000 worth of assets in that MCAP, you own 1%. $100 is 1% of 10,000. Obviously, we're going to be talking about billions of dollars. People having $1,000. $1,000 is off of a billion. What is that? 1/1,000,000th of a percent. So there will be a percentage built into each one of these, and that percentage is always going to be changing. And we'll talk about that. And because money's going to go in and out, assets going to go in and out on an hourly basis. Thus, the currency holder can demand items from the MCAP. So there's items in the MCAP: stocks, bonds, loans, precious metals, and we're going to go much broader than that even. So people can go to an MCAP, that storeroom, and actually get that stock. And you can have it electronically transferred to you into your bank and the like. But you'll have ways of doing that easily. A currency regulates its member banks. So we're going to go with a competitive currency. Competitive regulatory agencies. MCAPs are going to be regulatory agencies over their banks that they regulate, and the bank chooses who will regulate them. So every state will have roughly 10 to 12 banks every state will have about 10 to 12 regulatory agencies, and every bank chooses who will regulate them. So if you pick one that's going to be always in the favor of the bank, a lot of customers aren't going to want you. If you put it all the way, the regulations give the customers too much power and the bank very little power, the banks are not going to want to go with that one. There's going to have to be a nice in-between. An MCAP creates constitutionally anonymous digital currency based off the exact worth of the MCAP. So I want this to be a constitutional amendment, state constitution or federal constitution. I would rather go with the federal constitution, but if we can do the state constitution, and the MCAP's going to create it. The Constitution is going to say it has to be anonymous, or it doesn't have to be. You have the option of being anonymous. So right now the government knows too much about us, knows too much of our banking. Our Fourth Amendment rights are just totally gone with all the banking regulations that we have right now through the government, the right to know your customer and all that stuff. Our tax code just totally demolishes the Fourth Amendment. Okay, let's see. The BD, named the back dollar, is a federal clearinghouse for all recognized currency. So let me get into this. I think I'll get into it with another slide or two. But that's going to be the federal clearinghouse where every currency sends up everybody else's currencies. That they're going to be collecting currencies all day long, And once a day, once an hour, whatever, however often they want to, they will send it up. And then everybody else is going to, then your currency is going to be gathered by everybody else. And they're going to send your currency up, and then we'll trade it back. There's going to be some differences, and we'll discuss that. The BD, the paper and coin currency. So not only is it the clearinghouse, but it is the paper and coin currency. They create that. They collect proportionally currency from the roughly 600, I say about 1,000, but 600 if there's only 50 states and 12 per state or so. From the roughly 600 MCAPs, so proportionally. So if one MCAP holds $10 billion worth of assets, another one holds 20 billion, well, the 20 billion gives twice as much currency to the BD. So everybody has to participate. That's a requirement of being a BD. Having your own currencies, you have to participate in this clearinghouse, and they get to make the money, the paper money, based off of that. Now, it's probably going to be less than 10%, maybe even less than 5%. I'm not sure exactly how much that's going to be, but that's my rough estimate going on right now, is how much paper and coin do people want to hold, and versus digital, because bank accounts are going to be digital. They are now, but you can hold paper if you wish to, and if you want to have your bank account being the BD, you can do that too. But we can do that. There's a lot of ways we can do that, but that's how we're doing it right here. But you have to have enough. They will collect enough so they fully back up the BD. I'm not going to get into the numbers right now, but if every currency has, let's say, $10 billion average, and 10% of the demand from the citizens are about 10% of that. So every currency will give out roughly $1 billion. 600 currencies will be $600 billion worth of paper and coin. So they have to hold that $600 billion worth of paper and coin. Currencies, digital currencies from each BD, $1 billion each, to create that $1 billion. So it's an average. Prices are priced in the marketplace as the BD, because that's going to be the average. As commerce happens, banks and MCAPs will obtain many different currencies just by normal trading, because everybody has to take everybody else's currency. All day long, a normal store, Walmart or whatever, they will be collecting currencies from everybody, all 600 to 1,000 currencies. It'll be really easy. It's all going to be digital. Everybody's going to, people take the Visa and the MasterCard and American Express right now, something very similar to that. And they can take the BD as well. The MCAP sends up all, and that can be anonymous too, so don't get me wrong. MCAP send up all the currencies, not their own, so they hold back their own. It'd be 1/600th or whatever. You just don't send up your own because you own your own. You take it to the BD. You send it up to the BD, to the clearinghouse, and receive all theirs back. Now, there would be differences in what was sent up and what was received back, because all your people that go with your BD, with your digital currency, is going to spend money outside of there, and then everybody else is going to be collecting money and sending it up and coming back down, but they're not going to match. They're never going to match. So what you do is, some banks are going to be heavy. Some MCAPs are going to be heavy. Some are going to be light, and the heavy ones get assets from the light ones. They go to their storerooms. They get stocks, bonds, gold, whatever. They get real assets to match that difference. And then on a daily basis, if you want to do it hourly, you can do it hourly. But on a daily basis, let's just keep on saying daily basis, they will even the books up. They will get stocks and bonds and gold to move from digitally, to move from one MCAP account to another MCAP account. Because if another bank has your currency, they own part of what's in your BD, part of your storehouse. So they're legally allowed to go get it because they own it. So another bank owns assets in your storeroom. so they can go get that storeroom. I mean, get that lumps. I mean, ounces of gold, to stocks, to bonds, to loans, to whatever they want. They can go shopping in everybody's storerooms that are heavy. I mean, that's light, and then so everybody who's heavy on theirs, they have a lot more currencies they send up than they're getting back. So they're heavy and light. So they transfer assets back and forth. You might not be able to wrap your head around it right now, but it doesn't take much thought to realize that can happen. And maybe I'll try to get into that on the other videos. Okay, I made it 15, 16 minutes right now. So everything's easy to find on Haley2024.org. I have my competitive currency down there. I have 2 different pages actually. One with this, one going more into the full competitive regulatory agency structure. And then I have on Facebook where I want to do a lot of my communications, people making comments and everything. So until the next video.